Hi, this is Jack Crooks from Money and Markets TV. Last week we learned that the U.S. unemployment rate fell to 8.5% in December. That was good news for President Obama, but it's still nowhere near as good as the jobless rate of another industrialized nation, Australia. That country has benefited from its expanding trade relationship with China, but that relationship is also creating some negative side effects. Chinese-made goods are now undercutting the price of Australian-made products, and some Australian jobs are being exported overseas. Those trends are causing a backlash against China and against some Australian companies that sell Chinese products. Meanwhile, Australia's economy is feeling the impact of the global slowdown, and in particular, China's slowing economic growth. We can see this most clearly by looking at the drop in Australian business confidence over the past couple years. But it's also evident in other measures of the Australian economy, including manufacturing. Australia is a big producer of natural resources, but it exports those resources to other countries, mainly China, rather than developing them into consumer products themselves. Australian consumers are also feeling the pinch. Retail sales have recovered somewhat since the depths of the global financial crisis a few years ago, but they're still nowhere near the pre-recession levels. Despite all these negative factors, the Australian dollar has held up very well against other key currencies. However, that strength is putting even more pressure on the country's non-mining related industries and making Australian exports less competitive on the global market. Overall, I think Australia is well positioned to stave off a recession, but the country will have to go through some form of transition period in order to balance out its reliance on the mining and resources sector. Considering my gloomy outlook for China and Europe, that transition period may be this year. Hopefully, 2012 will be characterized by a leveling out of production cost and a shift in labor and capital. That would cause the Australian dollar, which has been trending higher against the US dollar since mid-2008, to turn back down. It would also give a boost to the relatively stable Australian economy by helping the country's exporters. For these reasons, I've been recommending that my World Currency Alert members stay on the short side of the Aussie dollar. I'm Jack Crooks from Money and Markets TV. Thanks for watching.